So the number one DM that I get since joining Unity is how I'm able to keep positions open for such a long amount or a long time. Okay, so if you guys don't know me, I'm a swing trader. If I do scalp, they're going to be very quick, but I typically hold positions for days, if not weeks. Um, the most recent trade that I've held for days has been the TRB trade that I went over in my video that I made on YouTube, right? But most recently, I made a whoa, hold on, hot mic. The most recent trade that I've made that's currently a swing trade is the Bitcoin long that I'm in. Okay, if I can find the chart. So this one, um, currently underwater, but I'm not worried about it. Intraday price actions do not affect um, my trading. So that being said, I know a lot of people start panicking when positions go against them. Okay, and by against them I mean in the red. And there's many reasons for that. Okay, um, it's very hard to not be emotional when trading. I know a lot of people, including myself, sometimes. Right, when we see red, we start to panic. And those that are in my class, I know I've gone over this, or former students, I know I've gone over this, and I will be going over it with my new students. But trading psychology is very important. Okay, you will never be able to remove emotions from your trading, but you can lessen them, right? So my number one um, recommendation would be, if you are going into a trade, go into it with the realization that you are going to lose that money, okay? Or if you're going into a trade, understand that stop losses will hit. No one's going to have a 100% win rate, right? Because if you can slightly remove the factor of, hey, um, this money that I'm trading with, one sec. This money that I'm trading with is something that I'm okay with losing, then taking a trade, no matter how long it is, whether it's a scalp for a quick 10-minute or a swing trade for days, you should be able to be okay psychologically moving forward if you are playing with money that you can afford to lose. A lot of people trading in the Discord have higher leverage, and although leverage is completely irrelevant, it's all about position sizing. If you increase your leverage from, let's say, 10 to 100x, 150x, or whatever, right, on some exchanges, you are able to go in with less margin and more of a position size. But you don't understand the impact and risks that are going to come with that when you open up an over-positioned, trade, right? As soon as the trade starts going against you, you start panicking. Whether it's $10 or $60, whatever it is, you start panicking. Okay, that panic will create other irrational decisions, such as, hey, I got a DCA to get myself out of this. I can't afford to lose $10 or $20 if you have a small portfolio, right? I can't afford to lose, $150 in this trade. So what you do is you start DCAing and you get yourself in a further red position, and then all of a sudden, you make other irrational decisions. Maybe you move money from your spot account to your futures account to lower your liquidation price, or maybe you, sell assets from your spot account, right, to boost your liquidation price. So the first thing that you have to do when entering a trade is setting up a stop loss, right? This is why my trading style requires setting limits. I'm able to get every single, ounce of planning that I can before I enter a trade. So as you see, if I call something, it's going to take, you know, possibly days or hours to fill. I've done my research. I know my levels. I've placed how much I want to go in at entry and DCA points, and I have stop losses set up. Okay? Most of the time, when an analyst calls something and it's a market long or a market short, you may not. If I give you an example here, for example on Sol, Okay, and this is for my degens who do not know how to position well. Okay, if you had, here's like, and I don't trade on 3 minute, but for example, here's a 3 minute support, right? Price gets over here, and an analyst or yourself, you decide to long, okay? And if you market long, most of the time you guys don't set up stop losses when you get into the position. I'm gonna, one sec. Someone's got a hot mic. Okay. So you open up a market long over here, and then all of a sudden you see this huge wick to the downside. Before you even have the time to put in a stop loss, right? You're most likely going to get liquidated if you don't, if you go in degen at like 150x with like 50% of your portfolio, right? So my trading style revolves around placing limits well in advance, entry, DCA, how much I'm risking if my stop loss gets hit, right? So I don't have to go through the roller coaster of emotions when something goes against you instantly, okay? And these wicks here, these, if you got into Sol here and within 6 minutes it went, 40 cents, what if you shorted here because you saw resistance, right? And then all of a sudden trade goes against you. Are you prepared to lose how much money you're entering the trade with, whether you're on ISO or cross? If not, lower your position size. If you have any doubts on a trade from an analyst, lower your position size. You don't have to go in risking your average 2 to 3% of your portfolio if you are uncertain about the markets, if you are uncertain about the play or the setup. But truth be told, and I'm not, digging at anyone here, about 50 to 60% of the server are here for calls. Okay? And there's nothing wrong with that. But if an analyst gives a call and you are not aware of, what they're seeing, and maybe, they see something bullish, but you personally can see something bearish, right? You enter a call, right? And then you have to fight against your emotions. Like, hey, like, why isn't this green? I took the one play that this person has given out of their last 15 or 20 that's red, right? You get frustrated. So it's very important to learn why an analyst gives a call, whether it's a quick glance. If they market call something, like for example, if Neil calls, hey, market long ETH, right? There's going to be a chance for you to get in, whether it's like $1 or two late, or it dips a little bit more after his entry is called. But take that time to analyze the trade and set up your stop losses before entering it. Okay, because the number one liquidation mishap comes when people don't trade, don't set stop losses. They go to bed with active orders open that haven't filled yet. You have a day where the news is completely like messed up, and for example FTX goes out, right? Are you prepared for a day when Binance goes out? Do you go to sleep without stop losses? Are you aware of possible economic news that can come out, like, hey, all of a sudden we have World War III starting, right? If you are going to sleep with positions, have stop losses open. I personally cancel all my active orders when I go to bed. I don't leave a single one. If I wake up the next day and they haven't filled, I go ahead and re-put those orders in, right? If I miss out on a trade, so what? The crypto market's 24/7. But a lot of people are trying to go for that home run trade, that exact moment. Okay? The other psychology that comes into this is, let's say you're on a 10 or 15 trade, like a win percentage, right? And the next trade, your 16th trade, you decide to up the risk. Okay? Not knowingly, that moment you decide to up your risk from, let's say, your 2 to 3% average to double that, you have already lost. I know a lot of people don't agree with that, but the moment you change your routine from having 2 to 3% each trade, or having one DCA, right, and nothing else, you will lose. Because what happens is, let's say, right, you were able to nail this short sol, okay? You were able to see, hey, here is a swing failure that happened. I'm going to short here, okay? You nailed it again. Here's another one, right? This one cleared this. You short it again, right? All of a sudden, you start developing this, I wouldn't say God complex, but this cockiness that, hey, I'm doing well. I haven't taken a loss in a little bit. I'm going to keep doing my same exact thing, right? And then all of a sudden, you up your risk from let's say 2% to like 6%, right? That moment you do so, your position size is going to be greater, usually, right? If that happens and the trade goes against you, you start making those irrational decisions because the numbers that you're used to seeing are, double that. So if you were $10 in the red, now you're probably like $20 in the red, okay? Those these routine changes have consequences. You start freaking out that you're in the red. Like I mentioned, you bring more USDT from your spot bags, or you add more into trades, right? You lower your position. Sorry, you lower your stop loss. Let's say your stop loss was like right there. All of a sudden, you lower it hoping to get out, right? Instead of having one DCA like you normally do, you decide to have 2 or 3 more, adding more to your position there, right? Creating a larger gap or a larger red position. And this all stems from you deciding to change your routine, right? The stop loss is there for invalidation. That is, if it hits, you're out of the trade. There's no reason to re-enter a trade or revenge trade, okay? But because you've increased your risk, now you have to, make 12% to make back the 5% that you lost, right? So my recommendation for everyone in the server, especially my students that I will go over with tomorrow in class, is write down a list of all the habits that you have, good and bad, okay? Write them down, keep it above your computer, take a screenshot if it's in your notes and make it your screensaver for a little bit, and live by those rules and mistakes to not make them again. If you make the same mistake again, right? What I typically did when I first started out, when I was making the same mistake, is I was removing capital from my futures portfolio, okay, to lower my account balance, okay? And I had to work harder to make that back, right? So if I was getting stopped out on a play and I decide to re-enter and revenge trade, okay, that's a mistake, right? That was the first time I did it. If I continuously do it again, then I'm removing, let's say, like 10% of my futures port and moving it to my spot portfolio, right? So now I have a lower balance and I have to work harder to get it, right? So do whatever it is for yourself to develop some type of strict rule, something that you can keep and establishing up, whether it's like, for example, not leaving trades open on the weekends, not trading at all on the weekends, closing trades when you go to sleep, removing capital from your futures portfolio, so on and so forth. You have to develop your own rules. It's going to be different for everyone else. Everyone's mistakes, well, everyone will eventually, whether you have or you haven't, if you haven't, great, but I've blown out my portfolio at least like 5 or 6 times throughout my trading career. Last time I did that was 2021. Okay, outside of that, never happened again. I have a journal that I write all my mistakes in. I have a plan that I stick to. Once I have a goal in mind, after I hit that goal, I stop trading, right? So you're not going to be rich overnight. You might hit a home run trade here and there, but crypto is not going to make you rich overnight unless you get into something super early, a low market cap coin. But if you're trading Sol, if you're trading Bitcoin, you're not going to get rich overnight, okay? And you have to come to terms with that. That winning and developing consistency takes time, And a lot of people don't want to do that. They want to go in with 10%, 20% of their portfolio, and their risk management's terrible. So, I don't know what's happening in chat here, but okay. But yeah, so I would suggest writing down these rules for yourself, keeping it somewhere that you can have easily easy access to. But in terms of holding positions and swing trading, so let's take this Bitcoin trade for example. Right, going into a trade, if you are going into it with the mindset of, hey, I'm going to swing trade this, I'm going to hold this position for days, okay, then you have to trust your setup, okay? So right now, clearly we're in the red, but I'm waiting for lower DCAs to fill. Anything that happens in between current price and my DCAs is not going to bother me because I'm okay with losing this money. I know that every single trade taken is going to be risk, right? So do keep in mind that, the longer you're in a trade, if it's not going in your favor, okay, you might want to lower your position size or take a small loss, okay? Because the longer a trade stalls, whether it's Bitcoin or something, then most likely it's going to go against you, okay? But by that I mean like if you're in a day trade for over a week or two, right, and you hoped to stay in it for like 2 or 3 days, right, then you might want to take something like that in the future in spot versus leverage. Okay. So for those that are unable to hold positions longer, right, start smaller because you guys are probably going in pretty heavy, right? So if you're going in with like 4% of your portfolio, go in with less, right? And the other inquiry that I get a lot is, I trimmed after, or I took profit and I was unable to hold it because I thought, that was good enough profit for me. Let's say this is what you got out of this trade, right? A $600 move, which is 2%, right? If that is good enough profits for you, take it. You don't have to wait for someone to tell you to sell. I think moving forward, when I give a trade, I'm not going to give TPs because TPs, take profits, are usually at areas of resistance, right? They're not guaranteed to hit. Whatever profit is good for you and you're happy with, go ahead and take it, okay? But when you do take profit and your TP hits, you do want to move your stop loss up, right? A lot of people are happy with this 1% and they take profit, and then all of a sudden they close out their position and the trade continues to run higher and higher. Okay, it's going to happen. There's nothing you can do, but the only thing you can do is, if you're happy with this 1% move, go ahead and trim 30% or 25% and keep the rest of your DCAs open. Because when you have taken profit on this, let's say you entered in with like 20% of the allocated margin you set yourself aside for this trade, right? So if you have $100, you enter this trade with $20 at whatever X leverage, right? You can take profit here. If your DCA fills, then your average entry moves from over here down to lower to your DCA. Whereas if it had filled without you taking profit, probably somewhere in the middle, okay? But as soon as TP1 hits, remove your DCAs because that trade has been invalidated. Your take profit had hit, you move your stop loss to break even, and now you're just riding it up, or you basically get out at break even if your stop loss hits a break even. Okay, you can only add to your positions on the way up if resistance is flipped to support, right? If your DCAs did not fill. So in this example, if we longed Bitcoin here, which we did, right, and my DCAs don't fill, here is your clear resistance at 28K. This is where you first take profit because that's my first TP level, but once it's flipped to support, you can add more to your position. Okay, make sure when you add more to your position, it's equal to or less than your initial entry. So if you went with 20%, make sure it's about 20% or less. Because if you do more, your average entry moves up to whoops, that was a terrible line. Moves up to like here. Okay. How do you DCA 50, 25? No, I do 20. I do 15, 30, 35, 50 to 55. It's in my pinned messages. Never have your biggest entry be your biggest amount. So holding positions for a long time does take a bit of time to adjust to. It's not going to happen overnight. Okay, so if you go into something using a 4-hour or a daily time frame, expect to be in that trade for anywhere from hours to a couple of days, possibly even more. Okay, if you are trading on a time frame less than the 4-hour, it's going to be a scalp. Scalps are minutes to hours. Okay, scalps can evolve from hours to days, but you're going into it with the mindset that you're holding it for minutes to hours, and you should not be risking more than 2 to 3% on a scalp. Okay, the number one thing I suggest anyone doing before getting into leverage is understanding position size. Okay, if I hear one more, oh hey, like an analyst on 200x, right? Their risk is probably managed. Leverage is completely irrelevant. You don't need 200x or 50x to be profitable. Okay, so let me ask you a question, and you guys can reply or not. But let's say you have $10,000 in your portfolio, okay, and you decide to long SOL at 3x, at 3K margin at 1x. Okay, so no leverage at all, basically spot. Okay, versus someone that goes in with 50x and does $60 margin. Okay, so 50x versus 1x, and you have the same position size. Okay, who makes more money when it hits a dollar higher? I'm gonna wait for you guys to answer. Okay, only 2 people want to answer. I'll give it a couple more. So the question is, again, you have 10,000. Let's say there's a participant A and participant B. Okay, you both have $10,000 in your portfolio. Okay, participant A decides to enter a trade at 1x with 3K margin. Okay, and they're longing SOL at, let's say, $20. Okay, participant B is longing SOL at $20 at 50x with only $60 margin. So 60 times 50 is going to be 3K margin. Okay, so your margin is technically the same. Who makes more, 50x or 1x? The answer technically is the same, but the fee, I'm not counting the fees, but you're right, Glob. The fees do make a bit of a factor here, but it's the same. You have the same amount of margin, okay? Your position size is literally the same, and I can show you. So one person with 3,000 margin, okay, at 1x when SOL is $20, they have a 150 coin position. Okay? Whereas someone on 50x, okay, $60 margin, so 60 times 50. Whoops. Okay, divide that by the price of Sol. They also have a 150 coin position. So your position size is the same. Okay, leverage is completely irrelevant here. Right? It's all about position sizing. And guess what? Their liquidation price is also the same. But people automatically think, hey, 50x, they must be having a 700 coin position. Right? People automatically assume that higher leverage means greater position. Right? No. Higher leverage is just an illusion to show you that you have more money to play with or more of a position that you can enter a trade with lower margin. And a lot of people don't understand that. Okay? Leverage is an illusion. I will always say that. It's completely irrelevant. You don't need it. You can do well with 100x and 20 coins, whereas someone has, 10k margin and the same amount of coins. You will get the same results if your TPs hit. Okay? So I see this in chats a lot, that's why I wanted to address it. But when you see someone or an analyst use high leverage, their risk is managed. Okay? Yes, if you have a higher leverage and you market long or market short something, you pay higher fees. Yes, Painkiller. Perfect. What you just said is perfect. So, and there's nothing wrong with using higher leverage, okay, if you have a smaller portfolio, right? So let's say you have $100 or $50 and you want to make this a Degen account for a little bit, right? So you decide to, hey, I'm going to make this my Degen account. I'm going to, enter everything in with like 20% of my portfolio at 100x. Okay, there's nothing wrong besides the fact that if, a quick move to the downside, you're probably liquidated if you don't have a stop loss, right? But as soon as you grow that portfolio from $100 to, let's say, 500 or 1,000, you should no longer be using that 100x. You should be going to like 30x or 20x. And the higher you grow that portfolio, the lesser leverage you should use. To be honest, if you are at a portfolio where you have like 50k or 60k, okay, and this is from experience, there's no reason to be doing that much in leverage. You should move to spot. Okay? There's no stress of having a liquidation price. Yes, you can do leverage, but I never understand why people that have like 7 or 8 figures, they're keeping it all in their futures portfolio, right? You can be profitable trading spot. And to be honest, if you are not profitable trading spot, you shouldn't be trading leverage. If you can't trade spot profitably, if you can't win trading spot, and spot is not hard, you're just buying, right? It's going to go against you, so you don't have to worry about shorting anything, you're just buying. Okay? If you are unable to make money in this market from November on this whole uptrend, right? By just buying, if you can't make money buying, everything has like increased by like 2 to 3x, you shouldn't be trading leverage. Nice. And here's the thing, and one sec. Someone's got a hot mic. One sec. So I posted a PDF in here. It's basically tips and advice for new traders. Okay. The way you grow your portfolio is by compounding. Right? You don't have to go for those $20, $30 wins every single time or $1,000, $2,000 gains. If you start with $100 and you are making $1 every single day, okay, let's say you're making 1% every single day, right? At the end of the month, you have $130, right? Now, the next month, you decide to make 1% of $130 every single day, right? It's going to exponentially grow, right? And I posted that in my PDF, and I'll repost it. But the compounding effect is huge, and people don't understand. $2, $3 a day adds up. Okay, let's say you're making 2% a day with $100, right? Now, I don't want to share the plan because that's exclusively for my class, but go ahead and go to any compounding calculator. Start with $1,000 and make 2,000 or make 2% a day. Okay, 2% a day at 365 days, you'll be sitting at close to $1 million, and that's just 2% a day. Okay, but the point of this whole entire thing is you need to set yourself up with some type of plan, some type of risk management, and once you have a routine, trading psychology becomes pretty simple, okay? Because you're just going to be following that routine, that plan. The moment you change your routine, you start making irrational decisions, okay? Problem with this, if I take profits at one each time, but now if it hits stop loss on one trade, you down. So, yes, I mean, here's the thing though. If you are making $1 profit, let's say like that's a lot for you, and your stop loss makes you lose $5, right? Then there's something wrong in terms of your positioning and risk management, right? You should never risk your profits for one day in one trade. So if you made $5 in a day, you should not be losing $5 on a trade if your stop loss hits. So you have to play with your position sizing there. And hey, like if, so let me show this to you. This is the example, and I've covered this in multiple streams before, so it's nothing new. Where is link? Okay. Let me remove these. Okay. So you see how far my stop loss is from my current price, or from my entry. It says it's an 8.7% risk. Okay. Let me get my handy dandy calculator here really quickly. Okay. One sec, let me go back. All right. So follow what Caleb said. Look at your risk management tools. But let's say you have a $1,000 portfolio, okay? And you are going into this trade with 10% of that, okay? So $100 that you're allocating for this trade, okay? If your stop loss hits, it doesn't mean that you are going to lose 10% of your portfolio. It's all about position sizing, okay? So if you have $100, okay, and you're getting into this trade for Link at $6.94 your DCA, right? $6.64 your second DCA. These are your purchase prices. Okay. So let's say you have $100 and we're using 10x leverage in this example. Okay. So with $100, 15% or $15 margin. Let me get my calculator out again so I can show you guys the math. So 15 times 10, which is your leverage, right? You have $150 at your entry price. Okay, divide the 150 by your entry price. You have a total of 20.88 coins that you're going to go into at your entry. Okay. Second, you have 30 to 35%, which is your DCA. This is how I DCA, 15, 30, 35, 50 to 55. So let's use $35. So 35 times your leverage, okay? This is how much USDT you're going into the trade with at your DCA. Divide this by your purchase price. This is the amount of coins you're going to have at your DCA. Okay? Last but not least, the difference is $50. So 50 times your leverage. Divide that by your purchase price. So your last DCA, 75 coins. Okay? If all your DCAs fill, you have a total average of 6.83. So you've lowered your entry from 7.18 to 6.83, which is closer to your second DCA. Okay? Now you have a total of 146 coins. So for every dollar that Link moves up or down, you make $146 or lose $146. Right? So you take your average price, and this is how I calculate how much I lose if all my DCAs fill. If my DCAs don't fill, like let's say 2 of them fill, I have all of these numbers prepped in advance. Okay? So you take your average price, which is now 6.83. I'm just keeping it at 6.83, no numbers. Okay? Actually, sure. Divide it or subtract it from your stop loss. Okay? So 6.56. Okay? And then multiply that by 146. So if my stop loss hits, multiply that by your average or your quantity. Okay? If my stop loss hits, I lose 4% of my portfolio on the setup. Okay? But I entered the trade in with 10% of my portfolio. Right? So it doesn't necessarily mean you're going to lose 8% of your portfolio if your stop loss gets hit. With correct position sizing, you can lose less, which is 4% of my portfolio, right? For a swing trade. So this is why I recommend setting up everything in advance so you are prepared for whatever the market does. And if your stop loss does hit, you only lose 4%. Whereas, if you had entered with no DCA, so you entered in with your full $100 margin at 10x leverage, okay, divided by the entry price, okay, if your stop loss had hit, first of all, you have lower positions, right? If you had DCA, you have more of a quantity of coins, whereas if you went all in, less. Your average is higher too. It's at 7.18 instead of 6.83. Okay, so we take 7.18, subtract it from your stop loss. Okay, multiply that by the amount of coins you have. If your stop loss had hit, right, and you did not DCA, you lose $86, which is 8.69%. Right? So with DCAing, if your DCAs fill and you go in with the whatever DCA method you choose, which again, I should recommend that your entry should be less than everything else, you lose less even though you entered in with 10% of your portfolio. Whereas if you entered in with 10% of your portfolio here, right, and your stop loss hit, you lose 8%. Let me read some questions. Chat's blown up. Yeah, there's a lot of... just look up for an average cost calculator. There's a lot. Let me see, one sec. So, and here's the thing about success rates, is they're completely blinding, right? If someone has an 80% win rate, okay, versus someone that has a 20% win rate, the person with a 20% win rate can be more profitable than that of an 80% win rate. Now the question is how? Let's say that the 80% person, right, is winning every single trade. That person decides to risk up, gives back all of the profits. Yes, they had one loss, but they gave back all the profits. Whereas the 20% win rate, right, can have a huge losing streak and keep their losses small, right? And then all of a sudden they hit one home run and they're up on their portfolio, let's say 2x, whereas the 80% win rate lost everything. So win rate is just a number, right? Yes, it's great to have someone that is consistently hitting trades, but it doesn't necessarily mean a high win rate is high profitability. Okay. Do you try to hit the first DCA? So I would love to get my first DCA fill on any coin, right? So yes, I do try to have my DCA hit. There's not about like 50-60% of the time I don't get a DCA fill, and that's okay. I add on the way up. Can you post those calculations somewhere so we can refer back to them? Sure. It's in my what do you call it, in the PDF that I shared. TP percentages, it's all in my pinned messages on how I trade and set up. So if you check my pinned messages, you can see how I DCA and how I take profits. I get charged $12 fees for my futures trade. It could be one of two things. It could be that you're paying funding fee, or it could be that you are market longing, market shorting, and you're paying a fee to do so. This is why I set limit trades. I never market long anything unless it's spot. I market spot. Okay. So less fees in limit there's less fees in limit trades. Less fees in limit trades, and there's less fees if you're entering with lower leverage. If you have higher leverage, you're paying more fees. I think if you set a limit order, there's no fees for limit orders. Or maybe my VIP level, there's no fees. I'm not sure about other. Sorry, I haven't had a retail level in a bit. My Bitcoin trade, I'm risking 4 to 5% of my portfolio, but it's technically I'm risking profits from previous trades. Yeah, taker fees are higher. I just checked. I don't have a maker fee, so I don't pay anything to set limit orders, but they usually are cheaper on Mex. Yeah, this guy's reading my brain before it even happens. Think of maker fees as limit orders, and taker fees as market sells or market longs. So if you're closing a position without limits, like setting a limit order, right, then that's a taker fee. Whereas if you set limits to close or open, think of that as a maker fee. Cool. Enough psychology talk from me. I'm going to go over 4 coins. I have time for 4 coins. They can't be shitcoins. I'm not charting what? Like Cyber or UNFI. Sol. Alright. Here's the thing. And I went over this, Caleb, earlier. But the charts look a little bit different here. Right? So for Sol, there was an SFP on Bybit. Okay? And that SFP, and I use Bybit charts. Okay? That SFP did give a 4% move down. However, Binance chart did not SFP. It still went down, but it did not SFP. Okay, so I just wanted to put that there. In terms of SOL, it rejected, from resistance. Here is resistance. Swing failure pattern. I have a video on it on my YouTube. And to be fair, guys, like I know there's a lot of information on YouTube in this Discord alone, right? With the risk management and everything in the Discord, with the course coming out too. But if you truly want to learn, you have to put in the time to watch these videos, read the courses, everything. Like it's a must. When I started, I didn't trade for about like a year and a half. I was just researching and researching until I found the perfect strategy to fit my needs. Okay, so SOL, right? We had resistance. It was a perfect area to short. If you were to short this resistance line, your stop loss would have been above the wick, or in this case, above here, right? If you saw the swing failure on Bybit, it was a market short with the same exact stop loss. The order block here got filled yesterday. So let's go on a lower time frame really quickly. Okay, so we have a possible, and this is a bullish structure, right? Here is an ascending triangle. Okay, it needs to hold here though for it to go higher. An ascending triangle, there's the neckline, right? The horizontal resistance. Here's the trend line. For a trend line, you need 3 touch points. 1, 2, 3. So if it loses this, turns it into resistance, you can add to your shorts, and stop loss would be somewhere here. But shorting SOL at a market price is going to be risky. The reason for that is because SOL BTC has been on a tear, right? If we take a look at this on the daily, look, the last time SOL broke out of its BTC pairing, it continued to go higher, right? So if we take a look at July 23rd, God dang it, stupid. I'm on a different setup today. So July 23rd, right, it continued to go higher, right? It broke out of its BTC pairing. Same thing here. When it broke out in September, it continued to go higher, right? I didn't see a reason shorting this coin until it shows weakness. Okay, so order block on a daily, it got rejected from. Okay, now again, we go back on the low time frame here. It might just be burning off RSI. I don't see. Ooh. The daily also did have an SFP, so this might be looking to go down a little bit. Good. Go down to my limits. Breakdown of this will give you a technical target of 2186. We have a demand zone here. So breakdown, close below, retest, and then reject again. You can add to your shorts, and your setup would look something like that. But just understand that if you're not in a short from higher, it's going to be a very risky trade. BCH. One sec. So BCH rejected from the 0.5 fib. We have a bearish engulfing daily candle. Okay, let's draw some touch points really quickly. Now this is not a valid trend line. We don't have, actually, you can argue 1, 2, 3, sure. I wouldn't call it valid because like I don't like my touches coming, like if there's 3 touches, I want them to be separate touches, right? Like this is a cluster, I count this as one. Some people call this valid. For me personally, it's not. We have a demand zone here that was actually touched and bounced from. This resistance here was flipped to support. So the next bounce point could come at this trend line / support area. Now stop loss placement's high because that's a very wide stop. And again, we saw with the link example, they can have a wide stop. It's all about position sizing. All right, so stop loss, if you go on a lower time frame, was this just a huge breakout? Yeah, it was. All right, stop loss placement is going to be tough. Probably somewhere here. Hoping this holds. You have liquidity levels here to hold. So somewhere below that. Now this coin's very illiquid. Okay. There was a breakdown from the trend. If we go back up, now this is a 1 hour chart, but if we go back up to, there's a small little supply zone here. So if we go up to here, which is also a bearish retest point of this trend line, if it rejects, then you could get something like that. Now if Bitcoin pumps, like this has scam pumps all the time. I don't understand it. But that would be the setup. That's a 1 hour supply zone, bearish retest point, and you also have resistance. I'm not confident on the long, but it's a very decent place to bounce from. Atom. Atom's a shit coin. I don't. For me, it's a spot play. I would never trade this coin, but I can take a look at it. Let's flip our chart really quickly. Okay, clear cup and handle pattern. Okay, target of this cup and handle is around $6.60. So if this, now this chart's flipped, if this breaks out, retests, and goes higher, that would be the target, right? Now, support, support. Okay, so again, here is a little bull flag that's inverted. Gives you the same target. Now let's flip this back to how it was, right? Possible bear flag forming, inverse cup and handle. Okay, break down below the support, turn into resistance. These are the levels you're looking at. One sec, I'm reading short VCH. Someone's got a hot mic. Okay. BCH short from higher is nice. I just wouldn't short anything right now. Oh, we're dumping, huh? Last time I looked at Link, it was like $7.51. What's going on here? One sec. Oh yeah, that's a nasty dump. Okay, that's okay. Head over to my bids. Um, I don't know what XVS is, so I won't chart that. EOS. I think someone sent me an EOS chart and I charted it for them, but this is a high cap coin that scam pumps and dumps. Yeah, see, when something's like this, I don't trade it. However, wait, I think I charted. I did not. Nope, not valid. The only valid trend line that I saw was however the hell I had it. Possible breakout coming on the weekly. I mean, it broke out. It's just, does it sustain? If so, let's take a look at it on. This is not something I would trade. This barely moves. My grandma moves faster. And she's dead. Alright. Um, resistance here at 62. I mean, we are at resistance here as well. Was that funny? Oh, I just see everyone laughing. I don't like this candle. I think if it gets here, it'll reject again. But I don't know. Somehow break through. That's a supply zone that I would short. Fuck, I don't know. Longs. Maybe at this order block. Very risky. Okay. So you can take a scalp short here with stop loss above the wick. Otherwise, you have a order block somewhere like that if this continues to pump. I'll do 3 more. I'm gonna check OP. Oh wait, hold on. What's my? Sorry, I gotta check my trades really quickly. I don't have my phone. Oh, nice. Okay. Everyone's been actually DMing me about OP. I've just been ignoring everyone's DMs. I'm sorry. Let me check OP. Well, I don't know when I had this charted, but OP had an SFP. Confirmation to short was closure below. We have a demand zone here. So that could be a possible long attempt. Now, Here's the thing with OP. We've had 1, 2, 3, 4 clusters here. Let's call it like 7, 8, 9, 10. The longer this is going to bounce off this trend line, the weaker it's going to be. Okay, so a possible attempt can come here at 1.27. Right, we have a daily demand zone. Stop loss will be below this wick. If you want a little bit more of a risk tolerance, you can place it below here. Just lower your position size. Otherwise, lose that and we go to this order block here. Okay, we can bounce from this support area, which we've been doing so. But again, the more bounces from support, the weaker it's going to be. Again, no late shorts right now. Short should have happened on the SFP. This looks like it wants down, unless it breaks out of this downtrend here on the 15. It's going further down. It needs to reclaim this 1.35 level to go any higher. Right, so here was the range. Now it's back below within this range. Right, so if it goes back up here, it might reject and then just go further down. Okay. Sorry, there's so many coins. I don't want to say no to all of you, but APT. I'm going to say no to most of you. I have no filter. I'm sorry. All right. Yeah, I'm going to upload it onto YouTube after I'm done here. Okay. APT. This coin just has no chill. Alright. It must hold this level. 5.2 it must hold. Otherwise, turn into resistance. We're going much lower. Okay. 4 hour. Actually, let me check the 8 hour really quickly. It barely moves. It's like 3 cents, 4 cents. ARB I covered in my stream, my video. Order block. Outside of this area here, and here, the last place to long would be here. So something like that. You DCA within here. If it loses the trend line, turns into resistance, you short with your stop loss somewhere above here. Ocean. This is the last coin. How many coins do you trade? How long each day do you spend looking at charts? So I trade Bitcoin, ETH, Sol, Link, lately TRB, and anything that's trending, So that's why my trades are the same basically. Sol, Link, ETH, Bitcoin. Um, yeah, I trade high cap coins. So coins in the top 30 to 50. Whoa. One sec. Let me just check something. Okay, it rejected where it had to. Here's your support. If this holds, we have a huge falling wedge with a technical target of 62 cents. Here's your 4-hour support. We're on it. It must hold, otherwise we go back here. Turn this into resistance. You can open up a short with a stop loss somewhere here. Otherwise we hold. We go and test this again. If we flip this, you can long probably to this trend line. Longs are going to be taken at support again, but it's getting weaker and weaker. Right, we've had one sec. One cluster. Yeah, so if these wicks are kind of scary, but long support until broken. Stop loss placement is going to be hard because we have wicks here. There's a whole bunch of liquidity in this area. So we can actually cover those as well. Last question: when I have low port below $100, should I stay away from high volatile coins? 100%. Those that are trading like highly volatile coins should be those that are experienced in trading. Like TRB, I guarantee you about like maybe 20% of you guys that trade TRB most likely try to short every single pump up. Yeah. So right now it's nothing. You have to. I mean, you can take a small long here if you want, with stop losses below this low, but it's going to be very risky, and the R&R isn't great. It's 1.32. Best would be to long once this flip happens, like it did here. Right? Once we. Why won't you drag? Alright, one sec. Once we reclaimed it, like this is a battle of the bulls and the bears, but once we broke out, reclaimed it, went higher, right? Support went higher. So you're waiting for the same exact thing to happen here. Once this happens, you can long to here. Otherwise, if you took a long there, your stop loss, if you want, would be below here for less risk or below that wick, but the R&R isn't great. Okay. Cool. I'll do Ruin for you, Crypto Kid, because you're in my class. Last chart, I promise. I'm done after this. I gotta go. Man, all these charts look awful. Everything retraced. Right. Okay. So we are hovering at and I flip the chart so you can get a cleaner look at something, right? We're hovering at 4-hour support. Okay, so either we lose this, turn into resistance, right? Next area would be order block. First TP would be this SR. Okay. But you're looking for close below, retest, and dump, and you can go on it on a lower time frame to get the entry, right? So if you get into it on like the 1 hour, just know that the 4-hour may not close below. So if you take the scalp on the 1 hour, it's going to be quick. We actually had a bear flag here. Target of this bear flag would send you right into that support area. So if we go back up to retest this and reject, you can take a short with a stop loss probably above here. Target down there, 3 to 3.5 hour trade. Otherwise, close below. Short, stop loss somewhere up here. Now again, support's been holding right now. See how it goes. Might bounce at 1.8 because we do have an SR that hasn't been tested yet. But this order block is where you would long. Yeah, that 1.74 comes around this order block. Alright guys, I'm going to stop recording here.